Hello, everyone, and thank you for joining today's session on TTI Safe Income Worksheet. My name is Jay Goodis, and I am the CEO and co-founder of Tax Templates, Inc. The purpose of today is we're going to walk through the Safe Income Worksheet in some relative detail, and if you have any questions, please feel free to use the Q&A function directly in the app, and I will answer them afterwards. I expect it'll take about 15 minutes to walk through the worksheet. Then again, I'll leave a little bit of time for questions. All right, so with that, let's just jump right in. All right, so first thing I want to highlight for our Safe Income Worksheet is that we have three versions of this worksheet. And the difference in the titles is the number of shareholders the worksheet supports. As you can see, we have one that supports one shareholder, one that supports 6, and one that supports 32. A key recommendation I have is when you're starting with this worksheet to please always choose the worksheet that has more shareholders than you need. We can't add shareholders at a later point in time. We are looking at that as part of our development for a future version of this worksheet, but for the time being, please choose the worksheet which has more than you might need in the future. All right, so I've actually already opened up the 6 shareholder worksheet, as you can see in front of us. I will remind everybody that we do have access to TTI's completion guide in this worksheet. This is a built-in wizard. That's a series of links. So all you have to do is click on the orange text. It is a link. It will take you to the cell to complete and will provide you with an instruction of what to do. All right, so the purpose of our safe income worksheet is to calculate the amount of safe income that we can pay between 2 corporations, and we will do it on a shareholder level. All right, so the first thing that we are going to do in the worksheet is enter the determination date. So let's assume that we're doing this for a client as of September 30th, 2021. So I'm going to put that date directly into the determination date cell. To move to the next step of the completion guide, we are going to use this orange box to mark it as complete. The next step is to put in the very first year end of the corporation. And this is another one of those really key elements to do correctly when you first start with the worksheet, to include the very first year after incorporation, regardless of whether or not that information is available or not. The worksheet does go back to 1972. The reason we ask you to put the earliest year end is if we have to do an estimate of retained earnings, or if that information becomes available at a later point in time, we can't put those year ends back in before, but there is plenty of room in the worksheet for all the year ends that you're going to need. All right, so what we'll do here is I'll put in the first year end of the corporation. Let's assume that's December 31st, 2018. And when I hit enter, I want you to just watch on the screen. You will see that the worksheet is going to populate columns for every single year end that we are going to need to complete. All right, so one of the things that we've done when we designed this worksheet is we wanted to find a way where a majority of the work could be done by the junior staff, because I found a lot of times in public practice, the safe income calculations were being done by the tax partners, and we wanted to find ways to free up their time and push down the work. So this, as we walk through this worksheet, it might be a little bit different than the way you may have done it in public practice before. When I did these in public practice, I used to start from taxable income and make multiple adjustments. We've taken a very different approach with this worksheet, and I'll show you what that is. All right, so what I'll do is I'll just mark off my step here as complete, my review tick that I've put in the tax year ended. And the next step it's asking is for the net income from financial statements. So what you're going to see next is we're going to fill in the information directly from the T2 Schedule 1. So you'll notice in the reference columns here, we have lots of line items to make it nice and easy for anyone to fill this out. So if we're filling out the 2018 year end here, I'll just go to my T2 Schedule 1 and put in the relevant amounts. In this case, let's just assume that the client had $100,000 of net income from their financial statements. Next up, we'll be able to put in any of those Schedule 1 add backs or Schedule 1 deductions. So we'll keep this very easy today. We'll just go ahead and put in a meals and entertainment amount of $10,000. So when completing the worksheet, one of the major questions about safe income is, well, how do we calculate it? What does the legislation say? What does CRA say? And what do the courts say? And that's one of the tricky elements when it comes to the safe income calculation, is that there's not very much in the legislation. So we're heavily reliant on court cases and CRA opinions. So one of the things that we had to do when it came to building this worksheet was to provide our clients, that's you, with flexibility when completing the worksheet. And how we've done that is with this column on the very far left, with this S column. So if you see a row that is marked with an S, that means we want that specific row item to adjust our safe income balance. So in this case, for meals and entertainment, we've got $10,000 and we have an S included because that has been CRA's policy that we need to adjust our safe income for meals and entertainment. So if I were to jump down to our calculation of safe income on hand section, you will notice that below is our $10,000 adjustment. However, let's assume that at some point in the future, the CRA changes its policy, or maybe safe income becomes legislated, or potentially we disagree with the defaults that we put into the worksheet. Well, if that's the case, you can simply remove the S. And if I jump back down to the calculation of the safe income on hand, you will see that the $10,000 is gone. So we put those in place, and all the S's have been populated based on a solid understanding around the country and relying on a lot of reports and papers written at the Canadian Tax Foundation, and teaming up with other experts around the country to make sure that our opinions agree with their opinions, but you do have the flexibility to change them. You can go to our worksheet support if you'd like to see some of the background of why we chose what we did for each item on the T2S1. All right, so all we have to do again is fill in our T2 Schedule 1. This can really be filled in by anybody. We'll do the same thing for the deductions, but in this case, I'll go ahead and pass along on the deductions. If you do have other items that aren't listed automatically by us with line items, you'll see we have lots of other adjustments, other deductions from net income, and you'll also see that we have other additions from net income. So lots of changes where you might need to. So once everything from the T2S1 is done, we have a very important reconciliation. And this is something that you've seen in other solutions, such as investment bookkeeping or simplified or quick, where we're looking for ways to ensure the amounts are correct. And this is one of those key items. Here's the final number on our T2 Schedule 1, which is our net income or loss for income tax purposes. If that number agrees to the T2 Schedule 1, we can feel confident that we've included all the items from that particular schedule. So once that is done, our next step is going to be to go ahead and fill in other amounts that adjust our safe income on hand. And where you're going to be able to see that is in the safe income on hand section, where I was just at. And here we are. And you'll notice on the far left, we provided you with several titles of items that might apply that is going to adjust your safe income on hand. That's not part of the T2 Schedule 1, such as our financing fees and different types of debt forgiveness and taxes. So they're there to help you. But in most cases, the adjustments that are applicable here are going to be our taxes paid. So I'm just going to go ahead and put in taxes paid of $20,000 directly into the worksheet. And when I do that, if I were to just kind of scroll down to the bottom, we can see there is our safe income on hand balance of $80,000 for the year 2018. So now the question becomes is, well, how am I going to allocate that $80,000 to our shareholders? To do that, we are going to go to the various shareholder tabs. So I'm going to click on the Shareholder 1 tab here, and let's take a look at what this schedule is doing for us. So first thing what I'll do is I'll put in it as a holdco. Again, you have lots of flexibility in the worksheet to just follow the completion guide to take us through. So let's assume that holdco receives 50% of the safe income on hand. I can just put in 50% of the amount allocated to the holdco. And then you will see that we have 40,000 of safe income allocated to the holdco. If we pay any dividends to holdco, we can include those directly in the worksheet. And what you'll see is that we have an ending balance, which automatically becomes the opening balance of the next year. It is a running total, very similar to our capital dividend account. Now, this little section here has many important elements happening. The first one I'm going to highlight is that this here is a drop-down menu where our dates are. And this is really helpful because we might have different shareholders that join the corporation or become shareholders in different year ends. So on each shareholder tab, you can choose which year end do they join the corporation. And then what the worksheet will do is it'll pull the numbers directly from the years that are applicable. So that's a really handy thing when we do have different shareholders at different points in time. Another element here is we have 50% of safe income on hand for year one. But again, if we bring in new shareholders or something changes with the corporate structure, we might need to change that percentage. You can just go to the applicable year end where we need to change the percentage, let's say 40%. And then what you'll notice is we will use those percentages going forward, and we'll also update all the other year ends along the way. You can change the percentages in any year as applicable if there is a lot of changes that occur. A lot of times people are also doing safe income calculations after reorganization. And if that's the case, we need to include a starting balance. So in the worksheet, again, you can include the applicable opening balance on a shareholder level. And again, TTI's worksheet will update the calculations for us. Okay. And the last thing I want to highlight in this section is that you'll notice that we have these lines here for dividends paid and unpaid dividends. And the reason we've left this here along with other adjustments is there might be certain classes of shares that we need to reduce their safe income on, where other classes of shares we do not. An example of that might be a taxpayer that corporation has preferred shareholders, cumulative preferred shareholders. And if we pay any cumulative dividends on those preferred shares, well, that's going to reduce the safe income on hand available to our common shareholders. So that's an example of what these are specifically for. So if this was our common shareholder and we paid cumulative dividends to the pref shareholder, we can go ahead and include that dividend amount, and then the safe income on hand for the common shareholder will automatically update. So this is certainly one of the schedules where the reviewer takes a close look at because of the various elements that can apply that I've just described. All right, so now I'd like to go back to the dividends that reduce the safe income on hand here of 30,000. And this is a very important input. And the reason that's an important input is that if I go back to the Corp 1 tab, which is where we started to enter all of our safe income on hand information, you'll notice there's a link that takes us to the reconciliation to retained earnings. And this is, again, a very important reconciliation item. So if we are having junior staff prepare the safe income on hand calculations, before they submit it for review, they make sure the numbers agree to the financial statements. Again, an important control to ensure everything is picked up. In a case where you may be completing a safe income on hand calculation or retained earnings reconciliation, and you want to put in the opening retained earnings, potentially because we didn't put in the first year end of the corporation or some other unique circumstance, you can do that in the worksheet as well, just in case that's applicable for your specific file. Now, one tab I haven't shown you yet is our summary tab. And what the summary tab will show you is the safe income on hand for each corporation. So you always have those balances at your fingertips, and you can also see in what year and how much safe income on hand has been created for each shareholder of each year. This is a nice summary as opposed to being on the shareholder tab and having to scroll across in order to determine what the results are on a shareholder by shareholder level. Now, if I go back to our Corp 1 tab, a few other key elements I'd like to show you is a frequent question we have is, well, what do we do for roll forwards? Well, we made the roll forward as easy as we could. All you're going to have to do is go to the determination date in the very top left. And let's say that our next year end is December 31st, 2022. I'll just go ahead and hit enter, and you will see the new column will populate. We've created lots of room and lots of years, so you can just keep the worksheet going year after year. If at some point the client changed their year end, the worksheet supports that as well. So you can just go to the applicable date cell, put in the new year, and that might apply, say July 31st, 2020, and you will notice that all the year ends will update. And if it was a short year end and we want to go back to a December year end, we can support that as well. Just change the next year end and off we go. That's also very useful for anyone who might be doing safe income on hand calculations where we needed to split the year up. So from a preparation point of view, how does this work for most of our clients? Normally, they provide the worksheet to the junior staff, and the junior staff will go ahead and fill in the T2 Schedule 1 details for every single applicable year. They'll then go down to the calculation of safe income on hand and put in the taxes and any other adjustments, but in most cases, it's just the taxes paid. They'll then go ahead and fill out the relevant shareholder tabs, fill it out to the best of their ability, and then jump back to the Corp 1 tab, where they'll just confirm things such as their net income for tax purposes agrees. So that agrees to the T2 Schedule 1. They'll ensure that the retained earnings reconciliation agrees. And then they'll pass the file on to the partner of the firm or the final reviewer. And what that final reviewer will do is they'll go ahead and they'll check out the S's to make sure that they are all as expected and they agree with the treatment of all the safe income on hand items. If you're concerned that someone might have overridden one of the defaults, It's very subtle, but you will notice that the color of the cells will go from a grayish green to a straight green color. So that is one way to identify where there may have been a potential override. And after reviewing the yeses, they'll also take a closer look at the shareholder tabs to make sure they've all been filled out correctly for their clients and the safe income on hand balances are what they expect. So this is commonly kept up to date every year by our clients. We appreciate that there is a catch-up period for many clients because the rules came in 2017, which affected a lot of clients. So you can just go ahead and keep this updated every single year. And as I showed you, when you get to the next year end, you just fill in the information so that detail is available whenever you're looking to pay intercorporate dividends or some sort of reorganization. All the information is already complete. It's a nice way to be able to move quickly on those client files. All right, so I've tried to do a detailed review. I tried to keep it to about 15 minutes, but as always, I will stick around for a few more minutes if there are any follow-up questions. But if you do want to jump in yourself and you have questions after trying it yourself, you can feel free to email me directly. My email is jay@taxtemplates.ca, or you can email any of my colleagues at support@taxtemplates.ca. All right, so thank you very much for attending today's session, and I will stick around for a few minutes for any questions.